This was another superstar. Fast, fearless, the future of digital cash. Everything bills itself as the future of something in crypto. The future of digital cash. More like the future of being digitally broke. It peaked at over $37. Today, it's under $1. Another 90-something% collapse. It never came back. Zilliqua, same story. A 2021 high flyer, down over 96%. It never came back. The people who held these bags, waiting for break even, they didn't just lose money, they lost the entire bull run. Whilst they were clinging to their dead coins, other projects did a 5x, a 10x, a 50x. Holding a dead bag isn't just a position. It's an opportunity cost. You're actively choosing to miss out on winners because you can't let go of a loser. And I know what you might say. XRP came back. Okay, cool, the 1 in a million token that has sustained for several cycles. That's awesome. But 99.9% of alts are not XRP. Okay. All that said, I'm not saying you should panic sell every coin that's in the red. That's just as dumb as holding forever. There are strategic reasons to hold a losing position. The key is knowing the difference between a strategic hold and an emotional trap. When should you not cut? First, if your core thesis is still 100% intact and you're only down because of broad market chop. Is Ethereum down 30% because the entire market took a hit? That's a macro problem, not a project problem. That is completely different from holding a micro cap that lost 90% of its liquidity because the founder vanished. One is a storm, the other is a sinking ship. Know the difference. Second, tax implications. This is huge. Depending on where you live, selling at a loss can be a strategic move. In the US, for example, you can use those capital losses to offset your capital gains. You can even deduct up to $3,000 against your ordinary income. Selling a loser could literally save you thousands on your tax bill. That's turning a bad trade into a smart financial decision. But again, notice the theme. These are logical, strategic reasons to hold or sell. They have nothing to do with your ego or your break-even price. Also, do not take tax advice from this video. Speak to an accountant. Tax is very complicated. Anyway, the question is, how do you make this a repeatable discipline? Well, you need a framework. You need a system that removes emotion from the equation. And yeah, I know, I'm like the framework girl at this point. I have a framework for everything. But it's a good thing. Structure is good. Discipline is good. You think Warren Buffett just wakes up and randomly decides to YOLO into a stock? Of course not. He has a system. He has a framework. So here is my simple, no BS framework for auditing your portfolio. I call it the 3-question portfolio audit. For every single coin you hold, especially the ones in the red, you need to sit down and ask yourself these 3 questions. Why did I buy this in the first place? Basically, what was the original thesis? Has anything fundamentally changed about that thesis? Did the team quit? Did the narrative die? Did a competitor crush them? And if I had 100% cash today, would I buy this exact coin again at its current price? Be brutally honest. If the answer to that last question is no, then why the hell are you still holding it? Holding a coin you wouldn't buy today is the definition of bad portfolio management. The best portfolios are lean, clean, and filled with high conviction plays. Dead bags have no place there. And this is why I laugh when some clown comments on my videos. Your portfolio was so different a year ago, you must have lost a lot of money. No, because I bought most of those coins in the 2022 and 2023 bear market when they were cheap, and I rebalanced my portfolio throughout 2024 and this year, cutting the ones that no longer pass this simple 3-question test. That's not losing. That's winning. Look, I'm not going to tell you what to do with your specific bags. I am telling you to start thinking like a professional. The market does not care about your entry price. It never has, and it never will. So stop anchoring to it. Stop waiting for break even. Start asking better questions. Cut the dead weight. Reclaim your capital. Reclaim your mental energy. And reposition with clarity and conviction. Smart money doesn't cry over red candles. It reallocates, learns the lesson, and keeps moving forward.